Hello, this is the CCA Financial Literacy Health, Life, and Disability Insurance Personal Guide. This material will be on the Chapter 7 test. All right, so you don't have to memorize this presentation, but you do need to look over it, maybe make a few notes along the way, and so that you can answer multiple choice, true, false type questions. The presentation is located in the Files section on Microsoft Teams. So you can print that out and go ahead and do that before you watch this video so that you can go along with me. Alright, so the first slide, and yours looks different because it's 2 per page, but the first slide is the key terms of health insurance. So you're definitely going to want to know, just from a vocabulary standpoint, what each of these key terms are. Be able to answer a question, what it is. So the premium is the amount you pay every month for the health coverage. All right, so we're talking about health insurance here. The deductible is how much you pay out of your own pocket before the insurance company starts paying. Okay, so just depends on what kind of plan you have. Some people have a really low deductible plan, don't have to pay very much, and some people have a high deductible plan, they have to pay a lot out of their own pocket. There's an out-of-pocket limit, and that's the maximum amount that you have to spend on medical coverage in a year. All right, so an example might be once you hit $5,000 out of your pocket, you don't have to pay any more after that. After that, insurance would pay 100% of costs. Okay, in this high deductible plan, you have lower monthly premium, but a higher deductible. Okay, so, and then with a low deductible plan, you'll have a higher monthly premium, but you have a lower deductible. So we'll talk about each one of these, which one might make sense for your situation, and it changes over time. Okay, the second slide, we're still in health insurance. Reasons to choose a high deductible plan. Okay, if you're healthy, you rarely get sick, and you don't go to the doctor often. All right. If you're not going to the doctor much, you might as well have a high deductible plan, okay, because the premiums are lower. If you can afford to pay your deductible up front, okay, so if you have some cash, so you can afford it. If you have some cash in the bank and you can afford to pay your deductible, then choose a high deductible plan. All right, and you're also, you're very healthy. Or if you have access to health savings account or flexible spending plan. Not everybody has this. Health savings account is an amazing account. I don't personally have access to one, but it reduces your taxable income. So it's a way to save for health costs. It reduces your taxable income and it grows tax-free. Okay, and you get to use these for life. Okay, so you can contribute every year. The limits are $3,500 for individuals and $7,000 for families. Those aren't the kind of things you have to memorize for the test, but just know basically what it is. It's a special savings account. It reduces your taxable income and grows tax-free, and you get to use it for medical expenses for your entire life. Now, a flexible spending account, my wife does have one of these, and that's where you get to put up to $25.50 per year into a pre-tax account. Okay, so it reduces your taxes, and you have to use it for medical expenses. It doesn't grow, and you have to spend it or you lose it. You can carry $500 per year can be carried over, but It's kind of a use it or lose it situation. So it's not nearly as good as the health savings account, but it's better than nothing because you do get a tax break on it. All right, reasons to choose a low deductible plan. Let's say you have a chronic or ongoing condition. You got to go to the doctor frequently. You're pregnant. Well, that just means if you're pregnant, you're going to be going to the doctor a lot. Or if you have small kids, you might have to go to the doctor a lot. You are thinking you might be having major surgery coming up. You take a lot of prescription medications. Participate in sports, so you have a high risk of injury. Okay, if you're anything that makes you think you might have to go to the doctor frequently, or you're on a lot of prescription medications, then it makes more sense to have a low deductible plan. Okay, so that your insurance will kick in. You'll pay the higher premiums, but you pay less in deductible, so it'll end up better off for you in the long run from a financial standpoint. All right. So how do you get health insurance in the first place? Well, you get to stay on your parents' insurance plan until you're 26. All right, highlight that. That is really important. So while you're in college, while you're young, it may make the most sense for you to just stay on your parents' insurance, even if you need to help them with the premium sum. You might be getting a lot better deal there. Okay, but once you hit 26, you gotta figure it out for yourself. The most common way is through your employer, and it's deducted from your paycheck. And the employer will pay part, maybe sometimes even most of the cost. All right, it's definitely part of it. And you may have a lot of different options. So my wife, I think, has 3 different options through her work, different plans she can pick. And she picks like a middle of the road plan. She doesn't pick the cheapest or the most expensive. All right, you can purchase a private plan through an insurance broker. Okay, so there are people around town, insurance brokers, that just will sell a private plan. Pretty expensive. It's really common for you to go that route if you're self-employed. And then, of course, there are government plans such as Obamacare and Medicare. Obamacare provides insurance for people with low incomes. Okay. Obamacare is really hard to afford if you have a higher income. The premiums go up with your income. Medicare is for people age 65 plus. And if you go to healthcare.gov, you can get a lot of information about Obamacare to see how much health insurance will cost you. All right, so life insurance. So health insurance, this presentation is about 3 major different kinds of insurance. Life insurance is to provide for your dependents in the event of your death, your untimely demise. All right, so you have 2 types, term life and whole life. Okay? Term life, there's no investment component. So you pay an annual premium, could be monthly, I pay annually. And if I die before the insurance runs out, so I purchased a couple of 20-year plans. So if I die within that period, then my beneficiaries will get a cash payment. Whole life insurance has an investment component in addition to a death. So it's an investment. So you're paying into that and the money's invested. And it does not expire at a set point in time. All right, so I'll talk about which one I prefer in just a little bit. Okay, so just know what life insurance is, know what term life and whole life insurance, or at least be able to answer a true, false, or a multiple choice question about that. Okay, some specifics about term life insurance. They pay a death benefit, no investment component, talked about that. It's you buy it for a set number of years, most commonly 10, 20, and 30. Okay, so I bought 20-year plans years ago. I might buy another plan soon, but I may never buy life insurance again. Premiums remain the same throughout the period, and they're typically really low. Term insurance is very cheap. So I've talked to my real life example is just that I bought a 20-year plan, two of them, when my kids were little, and now that they're grown and out of the house, I think one of them is about to expire and the other expires 5 years from now. I probably won't replace them because you really want insurance when you have people who depend upon your income, and when that's no longer the case, there's just no reason to have it anymore. Okay, and so that's becoming very soon no longer the case for me. All right, whole life insurance. It pays a death benefit, has an investment component with a cash value, so you can cash it out. There are no term limits, so it follows you all of your life. The premiums remain the same throughout the life of the policy, but it's much higher premiums than term life. Okay, and there are high fees because of that investment component. Brokers make money off of that. It usually only makes sense for those earning $400,000 or more. There's some tax advantages if you earn $400,000 a year or more with whole life. Otherwise, term life is a much better deal. So my recommendation, until you get above that level, all right, go with term life. Okay, your investments, you want to do your investing outside of an insurance policy. All right. Then the third type of insurance we're going to talk about is disability insurance. This is the type of insurance that most people don't have. So disability insurance is an insurance policy that pays you part of your income if you're unable to work. Now, it doesn't pay all of your income, doesn't pay your whole salary, but just part of your income if you're unable to work in case of an illness, injury, accident, things like that. Short-term disability covers up to 6 months, and it'll provide 60 to 80% of your pre-tax salary. Okay. Long-term disability, it just depends what you buy. It can be 2, 5, even 10 years, and it pays 60 to 70% of your pre-tax salary. Now, people on long-term disability, they get injured, they get sick. You can apply for Social Security disability, but it takes a long time to qualify. I've known people who it took them years to get into the Social Security disability system, and it only pays $1,234 a month. Now, you don't have to memorize these numbers. All right, 60 to 80%, $1,234 a month. I'm just highlighting those because it's Social Security. You're gonna not be living high on the hog if you're on disability. It's just doesn't pay very much. All right, but disability insurance is probably something most people need to have during their working life, but most of them don't have it. So the 5 most common reasons for long-term disability claims: musculoskeletal disorders, so that's pain in the back and joints. So let's say you have a very physical job and you get down in your back, down in your knees, and you just can't lift things anymore. You can't walk very well anymore. So that's a common reason. Cancer, of course. Almost everyone knows someone who's been affected by cancer, and of course the cancer treatments are just a very long-term kind of thing. Pregnancy complications, if you have some mental health challenges, that can be certainly more than 6 months. And then you have injuries. You have a major injury that doesn't heal within So usually that would be short term, but you could have situations where you have an injury that takes you more than 6 months. All right, and look at us go. We're on the final slide. Ways to get disability insurance. Well, the most common is through your employer. In fact, most people who get it through their employer. You know, a lot of times it's short term also. It's not usually long term. A trade association. So if you are part of a union, maybe a pipe fitters union, carpenters union, something like that, they can provide insurance. And sometimes a college alumni group will sell disability insurance. So that's another way to get it. And then you can just straight up buy it. And the most famous way to buy it, most well-known way right now, is through policygenius.com. You can just go there. You can buy any kind of insurance on that website. That's just a website that tries to find you the cheapest insurance for your needs. And there's another website called meetbreeze.com that you can check out as well. But Policy Genius is the one, I guess they're spending the most money advertising. All right, so that does it for this presentation. Just look over it and see if, and try to be able to answer some generalized questions about health, life, and disability insurance. And that will be it for Chapter 7.